We're glad to have you back. The Monetary Policy Committee of the Central Bank of Nigeria has voted to increase the monetary policy rate, which measures the benchmark interest rate, to 27.25%. The monetary policy rate is the baseline interest rate in an economy. Every other interest rate used within an economy is built on the MPR. While addressing journalists after the briefing yesterday, after the meeting yesterday, the committee's chairman, that's the CBN governor, Mr. Olaimi Cardoso, said the committee members unanimously decided to further tightening monetary policy. The new rate is an increase of 50 basis points from 26.75%, announced by the Apex Bank in July 2024. The new rate reflects an 8.5% increase in interest rates under the current leadership of the Apex Bank, which took office a year ago. Let's hear the CBN governor.
500 basis points to 50% from 45%, and merchant banks by 200 basis points to 16% from 14%. 4. Retain the liquidity ratio at 30%. Considerations. The committee noted the moderation in headline inflation year on year in July and August 2024. The MPC noted that even though headline inflation trended downwards due to a moderation in food inflation, core inflation has remained elevated, driven primarily by rising energy prices. The uptrend poses severe concerns to members, as it clearly indicates the persistence of inflationary pressures. Members thus reiterated the need to work in close collaboration with the fiscal authority to address the current upward pressure on energy prices.
The president of the Lagos Chamber of Commerce and Industry, Mr. Gabriel Idahosa, joins me now to continue this conversation. Mr. President, good afternoon and thank you for joining the program.
Good afternoon. Thank you.
I think it's right to start with, what was the LCCI expecting after this meeting? There have been different projections. Some thought there was going to be a shift. Some thought there was going to be a hold. Some thought that it was just going to remain the same. And now we see that the central bank is saying, no, we are further going to tighten this until we start to see a bit of stability. Then we start to bring down rates, bringing the rates down. Now, how does this come to you? What were you expecting? And going forward, what do you think this impact this will have on the business economy or the community?
Well, there was wide expectation in the business community, in financial community, that at this time, central bank will hold the rates as a signal that we should begin to see a gradual but steady downward movement in the MPR, because it was necessary to begin to stimulate the economy while holding the rate that is sufficiently high to help CBN to manage liquidity. So a lot of people were surprised to see that CBN increased rather than held the rate as a minimum staying position towards gradually reducing the MPR rate as inflation also gradually comes down. So yes, the majority of the business community were surprised.
But now that the CBN has said this is the way to go, we saw that South Africa cut rates about 25 basis points. Also, the Federal Reserve's cut rates by 50 basis points. The Bank of England held rates. So many were thinking that where would the pendulum swing in Nigeria? But now we've seen what has happened. What does this mean for the rail sector?
Well, you more or less summarized the frame of mind of all observers in the economy prior to the meeting of the MPC, because this was a worldwide trend, both in the emerging markets like South Africa, which we expected Nigeria to align with, and the advanced economies. The effect is obvious. Cost of borrowing is going to go further. The economic growth is going to be slowed down. The borrowing capacity of businesses to grow their businesses is further constrained. The consumer buying power is further reduced because inflation is cutting off whatever buying power we have as consumers in Nigeria. So it's hitting both the consumers, manufacturers, and even the financial services sector because they have a lot of cash that they can use to boost the economy, but with the high increased liquidity ratio, it obviously means that they cannot lend as much as they would. They would love to lend to grow the economy. So that's what the picture is from decision of the central bank.
The reduction in inflation for 2 consecutive months, I know you touched on that in your first submission, but many say this shows that there's a policy impact. That's talking about policies of government and also, of course, on the monetary and the fiscal side. I spoke earlier to Mr. Taiwo Yedele talking about what his committee is doing. But the LCCI, in a report or in a statement earlier today, is stating that government needs to do more. Can we touch on the areas where you think more really needs to be done at this time?
Yeah, we mentioned some of this. The fiscal side has to do a lot more. We need to do a lot more to increase production because you have excess liquidity defined as too much money pursuing too few goods and services. So if the fiscal authorities boost production, remove the bottlenecks in all the real sectors of the economy, from manufacturing to agriculture, transportation, and even mining and the petroleum products aspects of our economy, is there's a massive increase in production, including power. If you see massive increases in production of goods and services, that increase will mop up some of the excess liquidity that is always a nightmare to the central bank. So certainly the fiscal authorities need to do a lot more to boost economic activity. Around things like improving security, especially in the farmlands and rural areas, so that small and medium enterprise businesses that cannot afford to buy their own security services can enjoy a more secure environment to increase their businesses. So all of this is in the hands of the fiscal authorities. So until that begins to happen, there's really limited effect that the central bank monetary policy actions can have on the economy, from the point of view of growing economy and improving the quality of life of Nigerians. Is pretty much part of the work in the fiscal sector and the fiscal authorities and the real economy that can see improvement in our economy. The central bank is just struggling to stem the waters, to avoid the dam of liquidity overflowing. But it's really the fiscal authorities that can produce the goods to conveniently absorb all this liquidity that we see coming from various sources.
How worried are you about this petrol price hikes and the dynamics we see in the market? That's talking about the NNPCL, Dangote refinery, the back and forth, and about pricing, because obviously we expect that this increase in price will impact inflation moving forward.
Yeah, well, that's why we are still talking about the fiscal authorities. The pricing of the products now is essentially between business partners. Dangote produces the petrol, they must sell it at the factory gate price that covers their costs and have a significant margin to pay the creditors of Dangote and profit left for the owners of the business. That's the baseline. Nothing else can be expected from Dangote. Now it's up to NMCC to manage that process of whether they continue to maintain what they call a shortfall and let the product get to us at the filling station at a price we consider reasonable. But it's NNPC itself that has come to the end of doing that subsidy or not for whatever they wanted to apply, and that it will now allow market forces to determine the price that we buy at the filling stations. Market forces means whatever price the marketers get the product, whether it's from Dangote or from imported, whatever price they get it, they will sell at a margin to give them profit at the pump. So that is what we are dealing with. The spillover of that, it affects us as Nigerians who run businesses or as consumers, is how to do it another round of inflation that is building on the previous rounds that we have. So there is nothing to worry about. Rather, it is how do I deal with this round of inflation as it affects me. Some people are reordering their lifestyles. They are changing how much time they spend with their cars or public transportation. A good number of people are now moving on to CNG and electric vehicles if they can afford it. And generally, everybody is becoming very conservative in the use of refined petroleum products, whether as as fuel in your car or fuel in your generator. Everybody is trying to cut down as much as possible in the consumption of refined products, because the price you have now is what it is. You go to the filling station, that is what it is. Whether you worry about it or not, it can't change the price. So it's individuals and business enterprises navigating how to deal with the impact on their lives and on their businesses.
Let's talk about foreign exchange management, because the volatility of the exchange rate is something that has amplified inflationary pressure, and you will agree with me. So the LCCI is calling for, let me put it specifically here, a transparent foreign exchange management process to reduce speculation and stabilize the naira. Can you take us through what really you want the central bank to do around the FX space?
Well, it's already significantly transparent. We have to give that to CBN. It's significantly transparent.
Good.
We're essentially saying that movement to transparency should remain. We are not expecting, and we think it should not happen, that some exchange rates will be allowed for some purposes. There has been a call for a specific exchange rate for the transactions of selling the goods to Dangote, some specific exchange rate rather than open market. We think it will compound our situation if any group whatsoever is given any special rates outside the open NAFEX rates that everybody can see. I think the obligation now is for CPN to maintain that transparent rate and then stimulate a lot of supply of foreign currency into the market by the various policies we are seeing. For example, the issuance of dollar bonds in the domiciliary market, which enable the government to attract up to $900 million subscription, and further incentives for foreign portfolio investments into our stock markets, further incentives for foreign direct investments into the economy. So those are the kind of things that we want the central bank to concentrate on, rather than finding a way to give some special access into foreign currency markets by any group of people, because we think that's an era in our economy that passed, and that we should move on to focus on the supply equation. How much more supply of foreign currency can we now attract into the economy by showing that we will be consistent going forward, that we are not going to come to any point in time where you have to begin to see foreign currency being issued to certain people on certain concessional rate for whatever reason, no matter how temporary that reason is. Everybody should be able to have access to foreign currency, whether from CPN, whether from export proceeds, whether from holders of domiciliary account balances. Everybody should operate in the same market at the same rates, in a manner that is transparent. Transactions should be very transparent in our banking system. as it is now, is sufficiently transparent to accommodate any legitimate transactions.
Before I let you go, let's wrap up with issues around as we move on to the next meeting will be in November, and that will be, I guess that should be the last for this year. Now, what are the fundamentals, or what do you think would shape that meeting? Looking at what we have now, some of those issues will remain. Domestic, global issues will still remain. So what do you think would form their conclusion or the decision as we move on to that date? What more do you think we should be looking at?
There is a general consensus that we will begin to see a gradual reduction in inflation between now and December, and that gradual reduction will convince the central bank to at least hold the rates and not have any more increase, or begin to actually to start to reduce the rates. The factors that are driving the reduction in inflation are fairly obvious and are expected to be consistent with the expectation. We expect to see a lot more migration from fuels like petrol and diesel to CNG and electric vehicles, which will reduce public and private transport costs, which will now reflect in reduction of inflation. There is a gradual build-up to that. Almost every month, we are seeing a lot more conversions of vehicles, new vehicles that are CNG or electric vehicles on the road. That is expected to continue. Food inflation is supposed to be mild or even start to coming down for two reasons. One, the concession to import some food products up till November, the harvests that we are seeing. So all of this is gradually driving the downward inflation that we see. And we expect that to convince the central bank to say, this is the time to begin bring down the MPR so that we can actually grow the economy, because we are paying that very high price of slowing down the economic growth because we are fighting inflation.
Interesting conversation. I must thank you so much, President of the Lagos Chamber of Commerce and Industry there, Mr. Gabriel Idahosa. Thank you for joining the program despite your tight schedule. Do enjoy the rest of your day.
Thank you.